Hey guys, what's up? Todd here. Welcome back. We're going to dive into the markets here. The market has really gotten smoked. Kind of big trouble in little China here. So we'll talk about the S&P. Talk about Apple. I was actually the most hated guy on CNBC today, so I'll tell you about that. And a couple other positions. So let's dive in. This is the daily, the S&P cash. And, you know, the operative pattern, I think, is a triangle. So let me just kind of stretch this out here. And you know, I don't think the world is falling apart here. I mean, obviously China's done another number on the market, but we actually did sell some put credit spreads here in the SPX and SPY today. There's pretty good support down into the 1920 to 1890 in the SPX, and that should be a C wave low. Then we get a D wave rally, another E wave sell-off, and that could possibly complete wave 4. So, you know, this could be just a sideways triangle. Now, if we break through the lows here at about 1875, then much lower, and we're in trouble. So trades we put on, I have a 1920, 1910 SPX put spread. I also did a 190, 187 put spread in the SPY. Those are in Feb, and we send those out to our customers, and I have those across several accounts. So that's the S&P. I am long Amazon. It's one of the stronger stocks out there, so we'll just take a look at that guy real quick. Here's Amazon. Nice wave 4 pullback. It's a flat correction in wave 4. Those of you who follow the wave theory know a corrective flat. So you go down in A, false break, 3 wave move in B, drop in C, stop out everyone you can, right into fib support. So we are in the Amazon trade. Let me go to this account. And what did we do? We did a 625, 620 put credit spread on the Feb 1 weekly, so we have that trade working. The other one is Apple, and I have no position in Apple now, but again, it was pretty cool. On CNBC, I had one of the top, I think it was like 3 or 5 articles on all of CNBC.com today. My producers wrote me and they're like, Todd, you're like the most hated man in CNBC. So I had the audacity to say Apple could break down in the 80s. Guys, if you want to get a laugh, scroll down to the comments section. I mean, there's people like telling me like burn in hell. There's telling me people like, this one was funny, get out of your grandma's basement. I kind of laughed at that one. People were like, this is voodoo, technical analysis is too subjective. And I'm thinking to myself, fundamental analysis isn't subjective either. I mean, all analysis is subjective. It's whoever can make the best decision and execute with the best reward to risk ratios who makes money. This whole game is subjective. There's nothing objective about it. So it's kind of funny. It's kind of funny. So it got a lot of play. And the reason for that call is, let me just show you, it's just a real simple measured move. There's nothing tricky about this. So let me go out to a little bit longer term here. So this is Apple weekly on the semi-log scale. So if you just take the drop from April down to August, back up to B wave, you take that percent drop leading into that August decline, project it lower from B, 100% is right at about $85. It's also on the 1272 external retracement of B wave down to C wave. So altogether, it's equality of A and C, and it's the 1272 of B down to C. So 85 is a pretty sweet level. There's a lot of trend lines right here. Okay, this is a huge level. 96, 97, 98 is huge. If you break through 95, I mean, I think 85 is a foregone conclusion. Then we have potentially much lower to go in Apple. But watch that 96 area. That is huge. Okay, so that's the roundup here. That's how we're looking at it in this market. It's kind of dicey within that Elliott triangle in the S&P. Amazon looks strong, Apple kind of hanging on, crude oil, a whole nother story, a lot of volatility, a lot of good stuff going on here. So guys, hope that helps. Hit that thumbs up button if you do enjoy the videos. As always, helps us rise up in the awesome world of YouTube. A lot of good content out there. I wish you luck, and see you in the next video update.